All right, good morning, hello, and welcome to the October 16th, 2024 edition of the Premarket Prep session. I'm your host, as always, stock options expert market strategist, Adam Holland, and I'm excited to get into what we have going on here today. Let's check out the news. Let's see what we have happening. Da-da-da. And you guys know the drill, right? If you don't, it's time for you to learn. We're here to do one thing and one thing only, that is get 1% better each and every day. So we're here to do that exact same thing here today. On this fine hump day, right? You've still got the majority of the week ahead of you as of right now, even though Tuesday has passed. And I'm excited to take advantage of that. So let's dive in and let's do it. Make sure you drop those ones in the chat signifying your intention to get 1% better, and we can knock this out of the park, as well as clear up some murkiness surrounding yesterday's price action. And once again, we've got a pretty short newsletter here this morning, so we'll keep it short and sweet. Surprise jitters is our top news. More than 420 billion. That's how much value Bloomberg estimates chip stocks globally have shed after their Dutch peer ASML Holdings lowered its forecast for 2025 and revealed that it booked about half the orders Wall Street expected in the third quarter. While ASML's shares tanked about 17%, the news also took down other semiconductor stocks: NVIDIA, AMD, Taiwan Semiconductor, Broadcom, Intel, Applied Materials, and Lam Research. Now, zoom in, and by proxy, right, by taking down NVIDIA, what do? You drop the whole market because NVIDIA is weighted so heavily now. So zoom in on Tuesday, chip equipment supplier. Again, remember that equipment suppliers, they make the shovels, right? When people say, oh, there's the gold rush, you make money, when you build the shovels and the picks, they build the shovels and the picks. So chip equipment supplier ASML slashed its net sale forecast to 30 billion to 30.5 billion euros from previous expectations of 30 billion euros to 40 billion euros. The guidance came in about 15 to 20% below expectations. For Q3, ASML's net orders were 2.6 billion euros compared to the consensus of 5.39 billion euros. Meanwhile, the quarterly net sales were 7.47 billion euros, beating estimates of 7.17 billion euros. So that's key, right? Because what did we see happen? We saw that their earnings beat estimates, but the stock went down. Why? Because guidance was revised to be lower. So just because you think a company had a great quarter does not mean that the stock will go up. They could beat and the stock still go down. That's what makes earnings so risky. And I point that out each and every time because, there's tons of times when people will come through and they say, hey, I think I'm going to, play earnings here, and they should have had a great quarter and da da da. It's like, okay, cool. That's fine. But also understand that unless you flush that money down the toilet, don't play it on earnings, because anything and everything can happen. And you cannot, like, there isn't an AI yet strong enough to be able to predict how stock will move post earnings without being privy to all the information pre earnings, right? Like, I think that if you gave a normal human with common sense access to the info beforehand, they'd be fine with judging it. But without knowing the guidance and the earnings beforehand, it's very tough. So again, I just do that as a word of caution to underscore, kind of the toughness that is earnings season, and you trying to win a lottery ticket by playing earnings constantly. Now, let's see here. Okay, so meanwhile, quarterly net sales were 7.47 billion, beating estimates of 7.17 billion. CEO Christophe Fouquet mentioned that while development in artificial intelligence remains robust, other market segments like logic and memory were taking longer to recover, and this trend would likely continue into 2025. Now, export curbs at play for ASML. A large worry is the business they are losing in China due to current US and Dutch export restrictions set in place to curb China's AI capabilities. Quote, so we expect China to come in at around 20% of our total revenue for next year, which would also be in line with its representation in our backlog, ASML CFO Roger Daston said. This means a massive reduction, as revenue from China accounted for 49% of ASML's revenue in the previous quarter. Separately, a recent Bloomberg report mentioned that U.S. officials have also been in talks to set a cap on export licenses for certain nations in the interest of national security. In terms of seeking out a commentary, quote, with the primary growth driver, China, gone, it could be a while before investor sentiment on ASML holding NV stock turns around. I don't think shareholders need to sell, but we could be range bound for the foreseeable future, said Kumquat Research, and ASML export restrictions kill key growth driver. Again, when you hear this information, you don't go, oh my gosh, I need to sell my ASML. You go, okay, this is something further for me to consider. And also, I need to consider the source. People see a headline and they're like, wow, oh my gosh, like I need to do something. Who wrote the headline? Kumquat Research? Who is that? Right? You always need to question who it is that's putting out this information. Is there any measurable effect? Right? Oh, hey, I think I should probably grab Apple calls because of this Apple event. Do you know how Apple normally behaves during, events? Oh, I think I should grab this because Tesla is having its annual trade show. Do you know how Tesla responds during these events, or do you just see that there's an event and you automatically assume? Our brain makes these jumps in logic, and the biggest thing when it comes to markets is stopping your brain from making jumps in logic that are not backed by quantifiable or measurable evidence. Because that's what I see most often, right? People were like, "Oh, this happened, so this. Why? Is there any data that supports that, or are you just saying that this should be good for this company, right? This should do that. This should do that. But is there any evidence that that's the case, or are you just hoping? Right? Are you saying, "Oh, I identified that this event is happening. That's all I need to do." More likely than not, we need to go three levels deeper in terms of work and investigation than we do ever nowadays. More likely than not, that's always the case, right? You've got to go at least 2 to 3 levels deeper than what you see. When people think they get one piece of info, they're like, "Oh, this is happening. Okay, I know what I need to do." No, more often than not, you get one piece of news, you need to dig two pieces deeper, right? To figure out whether or not you should be doing something. So if some company has an event going on, you need to look into how the stock has performed and during the history, right? Historically, based off of this event, and then also what the chart looks like. So you need to go 2 levels deeper, right? It doesn't just need to be, oh, headline conclusion, because that will lead you astray a lot of the time. And the issue is when it doesn't lead you astray, it leads you astray in the future. Because what did you do? You got reinforcement for the wrong thing. It's like if you're rude and you end up getting candy, what are you going to do? Be rude more often. It's the same thing with markets. If you jump to conclusions and you win, what are you going to do more often? Jump to conclusions. And over time, what will you do more of? Lose do you do win? Because it's not sustainable. We're all about sustainability here. Now, that's all of our major news. So what else is happening? We've got our rapid fire. Let me see here. Rapid fire stock news rundown, and then we've got some of what we're looking like pre-market. So what else is happening? Meta must face lawsuits over profiting from youth social media addiction. United Airlines, ticker UAL, beats Q3 estimates as it sheds unprofitable capacity. Qualcomm to wait until after U.S. election to make Intel's decision. Thank you. That's smart. I'm not an executive, but you don't have to be to see that that will be what you want to do because, you know, the current administration is not letting a lot of mergers and acquisitions go through. Fund managers move away from defensive sectors and rotate into cyclicals. Google Cloud says NVIDIA Blackwell line running in our labs. LVMH trades lower after China weakness drags down results. Consumers see higher profitability of missing debt payments in the next 3 months. Tesla lands key approval in Germany as it looks to ramp up production. Bitcoin hits 2 month high above 67K after monster inflows into spot ETFs. Crypto tickers paid us yesterday. Um, making it a great Tuesday. And then Harris or Trump shouldn't matter for markets, says Oppenheimer. Yeah, it shouldn't really matter really for markets at all. A lot of people, say, oh, well, prices were lower under Trump. Well, guess how that happened because of Obama beforehand. There's a lag effect for everything in markets. So again, whatever you see, you probably need to go 2 to 3 levels deeper because I get it. Like I went to college, I got, a degree in economics. So I'm a little bit more privy to how these things work maybe than the average people, but it's just like no, like if there are issues with inflation now that did not happen because of a year, right? Or 2 years, right? That happened because of what happened 4 years before, 4 years before. So it's the same way, right? Trump inherited a nice low inflation environment because Obama had to set that up. And that's not me coming out saying, "Oh wow, Obama, our savior." It's just saying that's why that was that way. Um, and same thing, right? Whatever happens for whoever is here next happened because of whatever someone did while they were in office currently. Um, because Trump would have had to deal with the exact same stuff if he ended up winning again, right? It would not have been very advantageous for him, but he also wouldn't have cared because he couldn't run again after that. So he'd have been like, whatever, I was president twice. It is what it is, right? I ran it up. I don't really need to do much now. Um, the bar is going to be set a lot higher this time around, right? This time around for sure. Today's markets in Asia, Japan down 1.8%, Hong Kong down 0.2, China up 0.1, India down 0.4. In Europe at midday, London, we're up 0.6, Paris down 0.6, Frankfurt down 0.6, the Dow down 0.1, S&P flat, NASDAQ up 0.1, crude down 0.2, gold up 0.7, Bitcoin up 2.9%. Nothing really important on the economic calendar. So we'll wrap it up there. My beautiful, amazing people, my constituents. Um, like I said, right, we had some nice profit taking yesterday. We had the crypto tickers come through for us. We had some banks, Citibank, Truist come through for us. So it was a nice green day, right? And to be honest, I didn't really care much about the chips selling off or SPY selling off. Granted, yeah, some Nvidia longer swings will have to hold for a little bit longer than we thought, but those were already a nice profit beforehand, right? Trimming some there. So it's one of those things where, you mind the charts, you execute where you need to execute, and you take profit and stick to the game plan, and you'll win more often than not. And that's what we did yesterday. That's what we're looking to do for the rest of the week. So let's keep it right, keep it tight, continue to close the gap between where we are and where we want to be. We're never going to be perfect. We just want to be a little bit better than how we woke up. If we did that, we hit it out of the park. All right, guys. Have a great rest of the day. I'll see you back here tomorrow morning for our next pre-market prep session. Deuces.